Hello and welcome to the CEO 1440 Show, the Mortgage Broker Builder Show, where we talk about all things mortgage, where our goal is to help mortgage bankers, brokers, independent owners do more, move faster, and take advantage of the markets that is out there for you day in, day out. Now, I have a question for you, or maybe a belief that I need you to wrap your arms around. If you believe that people today are struggling to find money for a down payment for their home, then you have two options. And I believe they are with the average age of a first time homebuyer now at 38 years old. You have two options. Option number one is you can fight with the masses at the end of the process after they've went out, figured it all out, and you become a commodity. Or you can move way up in the funnel and help them figure out where do they come up with from a down payment? What about credit? And you educate them along the way, and they come to you not as a commodity, but as a trusted resource. So today I have a guest here on the show that helps people do that very thing. Loan officers, clients across the board. I have Rob Chrane from Down Payment Resource here to talk to us. He's the founder, CEO, here to talk to us about all things kind of down payment. So Rob, welcome.
Thank you, John. Great to be with you. Appreciate this opportunity.
I'm excited to have you here. And I actually have kind of seen your stuff out there. And then we're at the NBA and had an opportunity to meet you there in Denver. And thought like what you're doing is really cool. And thought more people need to know about it. And so that's part of the reason that we're here. But I always like to kind of step back and just kind of start with first and foremost, let's go first. What is down payment resource? People are making the decision right now, a minute into this. Do I continue to listen on? Is this for me? And like I said, if you work with first time home buyers, this is for you. But can you just tell us a little bit like what is down payment resource? Just quickly kind of what it is.
Yeah, the quickest way I can say it, and I didn't make this up, I've heard it a couple of times over the years we've been in business. But some people refer to us as Match.com for DPA. And what I mean by that, now I'll get into the weeds a little bit, not too much, but um, we we've been around since 2008, and during that time we built the only database of its kind, the source of truth for not only down payment assistance programs, but all types, about 12 types of affordable lending programs. But, in our database currently has 2,266 programs across the US. Of those, about 75% are actually down payment assistance. They could be due on sale, repayable, deferred loans, and even grants, which are, basically grants of free money. Um, and then the other types of programs in there, the first mortgage products, for affordable first mortgage products through the state housing finance agencies, um, mortgage credit certificates where they're available, deed restricted programs, and on down the list. And as you go down the list, they're more and more, less and less frequently seen. But, um, as you said, it's since about 2020, I've started telling people that down payment assistance is finally cool. And people in the industry know what I'm talking about, and I get some chuckles out of that. But I also see in a room, I see people smiling and chuckling, maybe snickering, but everybody's nodding their head. Yep. And it's no secret. Coming up with a down payment for a home has always been the number one challenge to home ownership. But over the years, it harder and harder. I mean, we've had the run up in sales prices. We got higher interest rates. So it's more critical to more people. Um, and I'll come back to a little more detail about what we do. But one thing also, you mentioned first time home buyers. Yes, some of these programs have first time home buyer requirements, but it's important to know the definition of that. They use HUD's definition, which is you have not owned a home in the last 3 years. So anybody who owned a home before, but it's been 3 years, for these purposes, are considered a first-time home buyer. That's number one. Number two is that about 38% of the programs in our database have no first-time home buyer requirements. So there's an even more expanded opportunity to work with borrowers and help them in this way. And back to your question, so we have this database of all these different types of programs and tons of detail about the programs. But one of the most important things is keeping it up to date because these programs change. They funding may come and go. New programs come. Some programs are terminated. The eligibility rules can change. The benefits can change. So we have a team that does nothing but update these programs all day long. And we do it on a monthly basis. Our service level agreement is monthly updates. A lot of them are more frequent than that. But to give you an order of magnitude, I hadn't looked at the numbers at the end of 2024, but I know in early October of 2024, our team had already made over 200,000 updates to the database. So they don't change every day. You know, you really don't know when they're going to change, but you need to know if something changed. So that database is the heart of our platform. And then on top of that, we have tools that, as I was saying, using that Match.com analogy, um, our tools allow loan officers um, and product managers, assistants, underwriters, closers. They allow them to automate the matching process for a transaction with whatever programs are available. And it's really, you narrow it down to the programs that you or your organization has approved because you don't want to connect people with 2,000 programs and you're doing 5 of them. Um, so so keeping that information updated is important. And then those tools, uh, the tools work for you as a professional when you're working at the loan level. Um, and there are also tools that are consumer facing. And that comes to a really important point that I want to make today. Uh, there's no, and it goes to your point about are you commoditizing yourself or are you differentiating yourself by adding some real value? Um, and I don't believe I'm obviously biased, but I don't believe there's a stronger call to action in mortgage and real estate than to put a message out there. Down payment assistance is available. See if you're eligible. Consumers understand that message. They probably don't know there's even such a thing as down payment assistance, but when they see that somebody might be able to help them with their down payment, they will engage. And we'll probably in the conversation later maybe get into more, a little bit of um, analytics that really validate that point on a large scale.
I think that that's, you know, the it being available, see if you're eligible. There's a vast, I mean, I think NAR recently did a study, right? Like 70 some odd percent of people believe they still need 15% down to purchase a home. And I've been in the space and we'll next just quickly dive into you, but I've been doing this since the late 90s. And, one of the big problems and the buzzwords and the things that politicians talked about, Bill Clinton was in office and he helped roll out a program called the Flex 97 and a Flex 100 through Fannie Mae and Freddie Mac. They were a 3% down and a zero down, and I think it was only Fannie, maybe not Freddie, right? Like that's going way back in my brain, but it's been a problem forever of clients finding and coming up with money for a down payment. It's what FHA is in place for, what the VA is trying to do. And so as we move forward, right, the age keeps creeping up. It's harder and harder, especially when every year you've got to buy a $2,000 cell phone to have like the cool stuff. It's harder and harder to save money today. There's more things pulling from it. So these resources in my mind is something that I see, 3, 5 years down the road. It might be the norm of the way people purchase homes is with these grants and these different programs, and it might not be the exception. Um, so you guys position yourself really well. Now, you've been doing this, you've been in the space since I think you started in, I don't know, maybe Jimmy Carter. I talk about Clinton in office. Like you may have gotten in the business with Jimmy Carter in office. Give us just a little walkthrough on like, why should we even listen to you? Why do you matter? Outside of like, we all think we're important. Give us just a quick
When I
rundown.
Yeah, when I tell you how long I've been in the business, your listeners may decide, well, he's been around too long. What the heck does he know? So that could work in my favor or against me. But um, and you're right. It's scary but true. I'll date myself, and yeah, I was in the business before Jimmy Carter was in the White House. But and I'm I'm based in Atlanta, Georgia. I've been here all my adult life. So, he was governor when I started, and I started in the real estate business,
Okay.
and was in the real estate business for 15 years. About first 4 or 5 years, um, I sold real estate. I listed and sold properties. Then I became a broker and started managing branch offices for a couple of different companies in Atlanta. And then I transitioned into the mortgage industry. That was around, I want to say 1987. Uh, the conforming loan limit at that time was $100,000. So you had to go find jumbo loans if it was over $100,000. And I remember the Flex 97. You're bringing back memories. Um, Another one of my memories is that of course, we all went to offices then, wore suits and ties,
Yep.
and well, the only reason I had to replace suits was not because the whole suit was worn out, it's because the knees of my suit pants were worn out, and they were worn out from kneeling at the desk by an underwriter pleading to get conditions waived or just get a loan through. Uh, so anyway, so spent a lot of years, couple of decades in the mortgage business. Did, a lot of those years originating, but also sales management, and then some other leadership positions in the industry. So that's the background, and along the way, I just kept obviously kept running into down payment assistance programs and other affordable lending programs, and it was always intimidating because even if you're working in one general region or metropolitan area, there can be dozens of not only dozens of programs, but uh, 6, 10, 12, or more program providers. So how do you keep up with all that and all the rules? And it's like, you know, it's in some ways it's sort of like the contrast between doing a conventional loan and an FHA loan. I did more conventional than FHA back in the day. And so when I got an FHA borrower, it was like, oh man, I got to go dig out my guidelines and remember all this stuff again. And it's like that with DPA and even more. So really the start of all this was, I said for a long time, there's got to be a better way to execute and deploy down payment assistance. So you could almost say, I was driven by laziness to start this business, but it was really all the years I said it before this started. It was not my intention by any means to end up doing this. It's just I thought it's something somebody else needed to do. But it's sort of like be careful what you wish for. If you say something enough times, you end up doing it. And I say that jokingly because it's been an amazing journey. Um, and you know, I hate the thought of if I had not done this, I hate to think of the richness I would have lost in my professional life.
Well, had you muted there? That makes a lot of sense, and a lot of things do just come out of necessity, right? You're just plugging along, and the next thing you know, you've kind of invented this thing, and it kind of grows and it morphs. But and I've done like in the late 90s, early 2000s, we did down payment assistant type programs through FHA. Um, and I do believe it's one of those areas where there's a lot of misnomers, a lot of bad information. People know the loan officer knows that it's something that they need to offer, but all they get is that email from an account executive or that one pager that just highlights all the greatness about this one program or this one thing they have to offer. But the nuance is there's not a lot of actual experts out there or people that even really understand how it works. They might understand one program, but across the board, I think that clients are just getting bad information. And then I also think we as an industry have done ourselves a injustice in that we went out and kind of spewed a lot of bullshit over years. And so agents and other people are like, oh, it's terrible. It doesn't work. And I think it took, 10 years for people to like be okay to do VA loans or okay to do FH. I don't want to do an FHA loan. They have an inspection. Now it's very red. Like an agent doesn't turn away an FHA loan. Unless they've got a cash one, but that's going to happen regardless. So really cool. Great story. I didn't even know that Jimmy Carter was Georgia's governor prior to becoming president. I just kind of
Yeah.
right Watergate. I was a young kid at that time. Yeah, I was more concerned about watching the Dukes of Hazzard at 8 p.m. on Friday nights than I was about who was in office. I do remember my dad though riding his bike to work because gas was expensive. Right.
Yeah.
Like I remember that. That's what I remember of Jimmy Carter. Um, so let me just kind of step back and I want to just touch quickly again on what is down payment resource. It's you guys are a company that helps companies, loan officers, you got widgets for websites, different things like that. You you help them one, I think you have two channels. One, you help them identify what options do I have with this client, but then you also have stuff that's client facing, all leveraging this massive database that you've put together on the back end. Is that kind of like you said the match.com thing, but I think there's two components, the company component and the consumer component. Um, is that like a good way also of kind of
Yeah.
explaining it?
Yeah, you're hired.
Oh,
You got it. You nailed it. So yeah, so the uh, that platform, that database, when we're demonstrating our products for prospective customers, um, a lot of it's uncanny how many times a somebody in secondary marketing, capital markets, maybe sales and marketing, but they're looking at our product and they say, "Oh, this is like all regs for DPA." So part of our system is the all regs for DPA, and part of the system is the automated matching of DPA to borrowers and the properties they want to buy. So um, there are uh, sorry, I lost my train of thought a second, but um, they're just there's so many misconceptions that you touched on this, the misperceptions, misconceptions, myths that have gotten to be bigger than life, that have discouraged both loan officers and real estate agents, or at least discouraged some of them from getting into these programs and offering them and helping their home buyers. So some of the obvious ones, it's too hard. It's adding a layer of complexity. It's only for very low income households and for very inexpensive properties because these programs do have income limits and sales price limits for the most part. But sometimes people think of, oh, if I'm going to get somebody down payment assistance, they're probably buying a home, maybe a foreclosed home in a distressed census tract or neighborhood, and that's just not the case. I mean, um, you know, part of what we do is one of our channels is working with multiple listing services, and they make it available. They license access to our tools, and they make it available to their agent and broker members at no cost. And again, to automate the process.
hey, if you're here, it's because you understand that the world is changing at an alarming rate, and you understand that big data is going to dominate as we move forward. Either you're going to use it to grow your market share, or somebody's going to use it against you to grow theirs. If you want to dig a little bit deeper here, take a look at your own business, figure out and identify some key constraints, maybe some things that you could do a little bit differently to grow a little faster. Here's what I can tell you. After 27 years of doing this, helping well over 1,000 loan officers earn hundreds of millions of dollars of commissions, there are a couple of key constraints inside of your business. I don't know what they are right now. I just know that they exist. So if you're curious about this, let's get on a strategy call. Take 20, 30 minutes. You will walk away with one or two actionable items that you can do to do more business as you move forward. There'll be a link someplace here on the page. I look forward to personally meeting you. I recently saw, and I should have this written down someplace. Did you recently just partner up with Zillow or like someplace like big like that, some large, to provide information for everybody that's there looking at what options are available?
Yeah, definitely. Yeah. And our partnership with Zillow started, I want to say close to 3 years ago. And then from there, we added Redfin. And from there, we added realtor.com. So we're on three of the four largest real estate search portals. And, um, and that's been great for a lot of reasons. But, um, our mission, you were sort of asked about when you were asked about what we do. Our mission is to help our partners connect home buyers with the down payment help they need. And so the reason we work with MLSs and the reason that Zillow and Redfin and Realtor.com license our data and they access it through APIs is this. Number one, even today, most people, especially first-time home buyers, are not even aware that there's such a thing as down payment assistance. But also today, everybody, everybody starts their home search online. Long before they contact a lender, long before they contact a real estate agent, they're browsing. Data shows that a lot of times first-time home buyers uh, may start browsing on those sites 6, 12, 18 months before they think they're going to be ready to buy because they think they don't have a big enough down payment. They think they need 15 or 20% down, but they want to be homeowners. So they're aspiring, they're dreaming, they're planning, and they're browsing. So so take those facts and then keep in mind that, you know, part of the eligibility process, it has to do with household household data, household income, occupation sometimes, um, first-time home buyer history. There are about 6 or 7 uh, factors that determine the eligibility on the borrower side. But think about the property. The property has to be eligible. What makes it eligible? Well, for one thing, these programs they all have their own specific boundaries, geographic boundaries. So you need to know where the house is sitting. And if you know where the house is sitting, and they also typically have sales price caps. So you know the sales price, or at least the asking price, and property characteristics, property type. Uh, if you know that, then you can say, all right, this home for sale at 123 Maple Drive, uh, based on its characteristics, here are 6 or 8 or 12, however many programs that are available to a buyer of that home. So it's sort of like the reverse, the whole idea of being on property listing sites is it's in reverse. We're saying this home is qualified, and here the specific homes are qualified. So that's the first step in educating people and raising awareness that, hey, somebody might be able to help me with my down payment. And then see if you're qualified or see if you're eligible. Answer, on those sites, and with MLS users, a consumer looking at listings sees that message. They start to learn about the programs that would be available, and then they can answer 6 questions and determine which of those programs, if any, could I use if I buy this home. That's just such a huge, when people start seeing this, they will engage. They will send you their contact information because they want to learn more. Why wouldn't they? Why wouldn't they?
No, there's a whole thing that I like to talk about a lot, and we have as part of my coaching community, we give people everybody that's in the coaching community for the most part ends up with a FinLocker app that we call Fin Toolbox, right? Which is it's super high in the journey, right? Like we can put somebody in there that's graduating from college that might want to buy a house in the next 5 years and provide them little tidbits, education, things along the way to just kind of speed them along. And what I've noticed after 25 plus years in this business, a lot of people that might say they're 18 months out, once I show them that, hey, there's money available. Hey, you know what? Your credit's actually good enough like that, that one late payment your junior year at college didn't crush you and you make enough money. Once they're empowered to understand that home ownership is actually a reality, guess what? That 18-month window gets condensed down to 4 months. and they're buying a house in, somebody that today says 18 months, they're buying a house in July because they found the house so you're really empowering people with information. And, at any given time, 60% of the market, like they're unaware that they can even purchase a home. So I think that this is super cool. And you mentioned Zillow, and I tell people all the time that your biggest competitor right now, or the biggest thing that can put somebody out of business, is someone like a Zillow. Because anytime if I'm just a banker and I let my client go to Zillow before they go to my site, guess what they're doing? Right. You probably can't say this because you're your client, but Zillow is getting really good at scraping you off that funnel, start providing you with good information based on where you're at in the journey, and then nurturing you all the way through to where at the end you end up with a Zillow agent, you end up with a Zillow lender, and Zillow controlled you from the second you thought about buying a house all the way through. And they have tools like this. So just, if I'm an individual loan officer, and I'm going to ask you some questions here, if you were a loan officer, what would you do? But if I'm a loan officer and I see this, even if you're out buying leads or you're doing anything that you're doing, when a client goes to your site, right, they're going to your site to check out, like, is there more stuff there? It's not necessarily to apply. They're not there for the apply now button. If you don't have resources out there for your consumer to start picking them up before the apply now button, you're going to end up, a lot of those clients that show up at your site, they're going to get sifted off to the Zillows of the world. So it's super important to have these things embedded as part of your journey, uh, specific to you. So this is really cool. And I know you've got some like great tools.
Yeah, well, thank you. And yeah, I was just going to say that uh, part of our suite of tools, excuse me, part of our suite of tools uh, that lenders license is called the consumer portal, and it's just that. It's a way. It's something they can use wherever they're marketing digitally uh, to engage customers, new borrowers, and really just to start conversations. I mean, that's what that's doing your own lead generation is about starting conversations, and this is a great conversation to start. Um, One of our early MLS customers said something that I've never forgotten. He said, it starts conversations that not would have not otherwise taken place. Um, because it's just something people aren't talking about, but it's something that's so important. So yeah, so the way that works, uh, that tool, basically you're licensing a landing page and a unique URL so that when a consumer engages with that landing page and they want to be contacted for more information, that lead is going to go to you and only you because you own that URL. So we're not selling leads. So when we talk about using the consumer portal for lead generation, we always try to make it clear we're not licensing the tool to you and then selling you leads along with it. It's up to you to market it. But we've seen plenty of loan officers and real estate agents do some really great marketing, creative things, and even just using this on social media. Obviously, your first place is your web page, but um, you know, put a link in your email signature. I mean, how many places do your emails go? How many people see your emails? For one, so the basically the message. It's the same message. Down payment help is available. See if you're eligible. Somebody clicks on it. They go to that landing page. They decide, do they want to answer all of those 6 or 7 questions, or do they only want to answer a few? It'll still work. The only thing they have to answer is to enter some notion of location where they're looking. So the very first question is, do you have a specific property, or are you looking in a city? What city or county are you looking in? But if you have a specific property, put in the street address and zip code. It and that will generate results. So obviously answering the other questions will make the results more precise. Putting in your annual household income, putting in, are you a school teacher or a firefighter or a veteran, those kinds of things. will give you, more precise results. But if you want to sort of stay anonymous and just see what's out there, just put in a location and see what kind of opportunities are there. And then once people do that, then they're like, "Oh, okay, so this is real. This is something tangible. I understand this, and I see these agencies are governmental agencies, quasi-governmental agencies, nonprofits." So it helps them start to get comfortable with that this is not just some kind of. And then the last thing, and you may have some more questions about this part of the tool, but um, one of the most important features of this tool is that it allows you, when you're setting it up, it allows you, the loan officer or the lender at the enterprise level, to to go inside and select the programs that you want to display when somebody does a search. That's obviously critical because there's so many programs out there. If a potential borrower is eligible for one DPA, they're probably going to be eligible for at least 6 to 8. And, you don't want to show them 6 to 8 programs if you're not equipped
Right.
to offer all those programs. Um, so that's important. And then uh, I'll stop it after this fact is that, you know, part of the that loan officers have to working with DPA programs is that, you know, it's too complicated, too many moving parts. Um, uh, and we tell people, don't try to boil the ocean. Don't try to go out and learn every program that's in your market. Start with 1 or 2 or 3 or just get your feet wet, work through a few, understand the process, and you'll be saying, "Wow, this I don't know what everybody's so afraid of. This isn't that complicated." And as you gain, expertise, then you can layer in more programs. But again, just like I said, if consumers are gonna be eligible for one program, they're gonna be eligible for 6 or 8, you don't have to have all 2,200 programs in our database. Um, you need the ones that are gonna work for the most number of people, concentrate on those, and, build from there.
Yeah, I mean, if nothing else, it's a conversation starter, right? I mean, that's what you're trying to do. And the being able to limit the products, right? If you can't offer it, yeah, by all means limit it. Um, but again, if you're a loan officer and you have the best intentions as far as like helping your client with the best program available, like that's if they get the best program available and it's not through you, like you're still a win. You had a conversation, maybe there's a referral, there's something out of it. Sometimes we become, overly selfish that everything has to come back through us. Well, sometimes there are better options than maybe what we have to offer. And doesn't mean that they're going to close that way, but it's just something that's good there. So let me ask you a question here, and we'll get into like kind of your own individual loan officer product, which I think is really cool, very affordable, and something that if you are targeting this. But if you were, let's say, an individual loan officer, you work at a really small broker shop, the company's not giving you a whole bunch of money, they don't dump on you, 1,000 of these resources. Right, there's no big enterprise anything. It's you, it's your checkbook. You have to go out and make a living to pay for your family. What would be some things that you would just be doing? You talk to a lot of people and see a lot of things. Like, what would be your big 3 things that you're gonna do as a loan officer? And I'm sure that you're gonna put your own product in there, so it's really 2 other things. But, what would that look like? 30 plus years in the business, have seen and talked to a lot of people. What would that game plan look like for you today to feed your family as a loan officer?
Yeah, so, great point, and I'll start, I guess, with assuming that you're not using a tool like ours, and so how do I get started? How do I learn about down payment programs, and find some that I can do? So if you're doing it that way, I would start and, you know, do a search in your browser, put in, down payment assistance in, Jacksonville, Florida, or down payment assistance programs near me. Um, that should pop up some of the local agencies that have these programs. Um, and maybe you can use some different keywords, but something along those lines. And then find the agencies, uh, look at their websites and see, you know, see what the program is about, how much money, what are the income limits, those kind of things. And then find out either from the website or maybe calling the agency, what are the requirements for me as a loan officer to be able to work with your programs. There are programs that, and again, we're talking about, independent mortgage brokers, individual loan officers. They're programs that as a broker, you're not going to be able to do because a lot of the state housing finance agencies, they have um, more requirements, more hoops to jump through. But there are a lot of local agencies that have good programs through the municipalities. So your city, county. So that's another thing in the search to do. Uh, City of Atlanta down payment assistance or whatever, and find the local agencies because they tend to be more flexible um, uh, as far as requirements. There's some programs in some municipalities that have uh, no real lender participation requirements. Or some of them just say, well, you need to take this training or whatever. So that's where I would start. Um, and then, you know, and then if you get into it and you want to do more and make it more of a systematic part of your business, then look at a tool like ours, the one that we have for individual loan officers.
So is there a way, like, to me, if I'm just like sitting listening from the outside, is there a way to see what options are available through you first before going through that vetting process? Like, do people sign up
Yeah,
for like a month? I mean, I know the price of like your loan officer thing. It's like for one state, it's like less than $40, I think. They get the
yeah,
landing page, they get all of these things. So if I'm just looking at it from, a time standpoint, and let's say I want to add, a, DPA is available, check availability, like I want to get in that space. Would it maybe just be easier to like get with you, sign up, see what's out there, see what, what hoops do I need to jump through? And if there's nothing, I mean, we're here in Michigan, we've got a good number of programs. There's certain stuff, right, that is only offered through like you got to be working with whoever the bank is, but there's a good number of things, and loan officers and the AEs at the places for brokers are getting bombarded. If this is an enterprise thing, this is more a question for your company to deal with than you as an individual loan officer. But um, is it better for them to have a conversation with you first, even see if like this could be a good option?
yeah. Anybody is welcome to contact us. And you reminded me of something I should have said when you said, asking when I was saying what would I do if I didn't have a tool. And even before you try our loan officer version of our tool, you can go to our website, downpaymentresource.com, and on the homepage, one of the things you'll see is I forget what it says. Down payments available. See if you're eligible. Find a program. I think maybe that's what it says. Find a program. And so we have a widget built into that anybody can use. And so you don't have to have a specific address. You could say a city or a county. So start right there for free. You can see what's in our database, but that's also telling you what's in your particular area, at least at the city or county level. Um, the one thing it costs you, which is not really a cost, is to get the results. Um, you have to enter your email address so that you can be emailed the results. You'll see them on the screen, but you be emailed. We don't spam you. We don't. We're not doing that. Um, I think default is maybe it registers you for our newsletter, but you can unsubscribe
Right.
easily enough. So that's a way to quickly, easily, and cost effectively see what's around you. Then if it looks good to you, then go to the page, the tool for loan officers is called Down Payment Connect. There's a version for realtors and a version for loan officers. Look at that. That tells you what the features are. As you said, the cost, it's per person per state. So $39 a month per person for one state. If you're working multiple states, you could license up to 3 different states, but it's $39 for each state. So you start with one state, $39. That's a monthly charge. So you're investing or risking $39 to try, to basically try the tool. If you try it and it's working well for you and you really want to make it permanent, then you could switch from monthly to an annual thing and you get 2 months free. So it's 39 a month or 390 a year. But again, you're only committing upfront to a month. And so the tools you get with it, you get the directory, access to the directory. So you are in our directory, you're able to go in and see everything that's available in the state that you've licensed. And from there, so that really tells you everything that's out there. And also included in the details for every loan is what are the lender participation requirements. So once you have that, you can not only find the programs, but you can find the programs that have no lender participation requirements. Those are the easy ones to start with. And I should have said this, as far as what type of programs those are, through the municipalities, those are the traditional community seconds. So, pretty easy programs to work with. Um, Another thing that's important there is in that directory is where you will select the programs that you want to show up in the search results when you or a consumer use the tool. So there's a lot more to the directory, but those are the key points. And then there's sort of a tool to do an ad hoc search. So let's say somebody doesn't come in through your website through the tool. Let's just say you're working with any borrower or a new borrower. Then this ad hoc tool, you do searches on a loan level basis, transaction level for individual borrowers. So let's say, well, then there's the landing page. So you put that landing page out there, people interact with it. They get excited because they found out there looks like there's money for them. They want to get the details because it doesn't give them all the details, just the highlights. How many programs matched up with you, and what's the most amount of money among the programs you're eligible for. So that gives them the incentive to go further to get more details. So they enter their contact information. You get an email with that lead, and then they're probably going to be they're probably early stage, and so you can be doing more searches for them as they're looking at homes. So you have the tool for that. So you've got the directory, you've got the ad hoc matching tool, and then you've got the consumer portal, and to use that wherever you're marketing digitally. Um, Pretty straightforward. I think you're on mute, or at least you're.
No, I was on mute. So, and I was getting animated. So if you're a loan officer, I was pouring a coffee and I was like close to my thing and I didn't want to like have this like gurgling noise on there. But if you are a loan officer and you're trying to think of in our industry, we do a really good job of like telling you go and do this, but don't actually show you how. If you are a loan
Yeah.
officer and you're thinking about like, how do I connect this? I see how it could work. Reach out. This is what I do day in, day out. I help people kind of put their poop in a group and figure this out. So let's say you're doing, and a lot of agents and bankers do these shared Zillow spends, and you get hundreds of leads that come in. You don't really know what to do with them. Maybe you call, maybe you don't. What percentage of those people maybe have a question about a down payment resource that you could then create a pretty nice little email that goes to them, a campaign that you're now giving them the information that they want before they're ready to click that apply now link? I would say a good number of the leads that come in that way. Heck, if you're even calling on credit triggers, credit triggers, a vast number of the credit triggers are people early in the journey. They're not ready to lock in today, yet people are calling you, right? You want to lock in, you want to see a different rate. They're so far from that. Having something like this as a tool to give the bulk of the clients that are not ready to lock in yet. So it doesn't matter where you're at. If you have any leads coming in, there's a segment of them that could benefit from this, or the client that you've sent them out your 3 email sequence and they haven't replied back yet. It's probably because your 3 email sequence is guided towards doing something today where they're not there, where maybe a check eligibility or sending them someplace else. So if you are fall into that group and you're just trying to figure out how do I increase my conversion, reach out. I'd love to have that conversation with you. People say that there's a shortage of leads. There's not a shortage of leads at all in the mortgage industry. There's millions of leads. There's a shortage probably of leads that you as an individual loan officer can convert profitably, right? So I can go and find there's leads you can probably find for $500-600. There's probably leads with a signed purchase agreement that somebody would pay you, like if you want to hire a bunch of loan officers and pay them $1,000 a lead, and they'll do a bunch of cold calls for you, and you'll get a lot of closings, right? Like you have to hire them, put them in your company. You're not going to do it profitably, but you can find enough leads. So leads are never a problem. It's converting them at a high enough level, and something like this just helps tremendously. Um, and I want to be conscious of your time too. I had some technical difficulties getting started. Um, so this is a cool tool. They have a loan officer specific tool. You got questions, you can reach out to me directly. I'm happy to walk you through it. We will have some stuff here someplace in the show notes of how you can get with Down Payment Resource, where you can reach out to them. Their website's really easy, super user friendly. Right, you can go there, you can figure it out. Their website's good. Um, and then outside of that, so short of that, what would be like just a word of advice? You got a lot of years in this space. Any words of wisdom from a sage, seasoned mortgage vet that you would part on anybody that's maybe newer in the business, struggling, trying to figure things out? Just kind of anybody that's still alive and has survived until 25. Any words of wisdom for him or things that you would just share, insights?
Well, first of all, kudos and my admiration to all the people that have been fighting through these tough years and have survived and are still at it. You'll be, you'll be there for the long haul and you'll benefit from that. But it does, this kind of reminds me of when I started as a loan originator. Uh, where do you go to get leads or referrals? Realtors is always sort of the number one source for most people. There's some people who find other channels, but so you're told to go out and build relationships with realtors to get leads. And which realtors do you want to talk to? Because there's only a certain percentage of realtors that are really making a living at it. So you can, is that 20%, 10%? I don't know what it is, but it's smaller. So you narrow it down to the ones that are making a living. Well, one of the reasons they're making a living is because they've been doing it a while. They've been doing it a while, so they have lender relationships. They have relationships with loan officers. So the people you want to go out and the people you most want to do business with have existing relationships. So I think this has probably been since time memorial, but when I started as a loan originator, myself and everybody else I worked with, was told to, when you go out and call on realtors, just ask them for the loans that were declined or the pre-quals that their loan officers rejected and say, "Give me a shot at it. I'd love to take a look. Maybe I can find a way to make that work for you." Um, and that's technique. And sometimes you're able to convert a deal that their regular go-to LO didn't do because they've been in the business a while. They're getting a lot of leads and maybe they're not as hungry. Um, so so participating and being able to offer down payment assistance is just a better version of that. It's a better version because you're saying, you know, now the conversation is, I think I can help you close a few extra sales this year, and here's how. Um, And I know there's a demand among realtors because, like I said, we have MLS customers. Therefore, we're training thousands of agents every year. And the number one request we get is, tell me loan officers in my market that work with these programs. And if you don't believe me, take a minute, go to Facebook, go to a Facebook group called Down Payment Insiders, and just scroll through the posts. It's mostly realtors. Now loan officers are starting to figure it out and joining that group. But look at all the real estate agents' posts, and I swear sometimes it's every one, sometimes it might be every 2 or 3 posts, but you'll see one after the other that says that same thing. "Hey, I'm excited to join the group. I'm in Tampa. Can somebody please tell me loan officers that work with these programs?" So, there's a demand out there. So I guess that's the first piece of advice that comes to mind when you ask me that.
Well, I think it's good advice, and we are all struggling to, just to find business, to find clients that want to transact today. And sometimes we have to take off our need for something immediate to postpone our gratification for a little bit. But if you put a segment of your time, maybe it's even just a couple hours a week, into nurturing your deals for 6 months, 12 months, 18 months down the road, and having things like this available, I don't believe if you post one time a week across all your social media that you have down payments available. Check out your eligibility. I don't know if you post that once a week across your social media, you do a little video or whatever it is, that in a year, your business is worse off as because you did it. Like, I don't know that it's going to hurt you in any way. And I believe there's a tremendous amount of upside. And you get your landing pages dialed in, you get those other little things kind of happening. Some agents start finding out that maybe you're the down payment expert in your area and you're now known as the low down payment guy in your city. Wow, right? Then you're like, yeah, you're one step away from being, Tony Robbins. You're like, cool dude.
Yeah, and one thing to add to that too is that, um, don't think that because you're advertising your ability to connect people with down payment help, that every lead you get is gonna end up using down payment assistance. It's a conversation starter, and the best way I can illustrate that is when we first launched, one of the early comments we got feedback was that, uh, my borrower and I used the tool. Turns out they were not eligible for any programs, uh, because they made too much money, but they stuck with me. I closed a loan for them because I was the only one who told them there was such a thing. So they didn't even get it, but they appreciated that. And a little side note to that is that's a pretty interesting thing that uh, uh, that it can be a benefit if somebody doesn't qualify. Benefit is they probably don't if they don't qualify, it's probably because they make too much money. Is that a problem? I don't think so.
Not at all. We need conversation starters today more so than anything. And I even think when you get a referral, I've been doing this a long time. When you get a referral today from your real estate agent, it's no longer a referral to do business. I actually think in a lot of cases, it's a referral to search. It's a referral for that person to go look you up on Instagram, to go check out your website, to do those things before they decide to transact. And if you have something like this, you're posting about it, they now know, hey, that's a new concept, that's a new idea. And our world's changing a lot. And I think that the loan officer of the future is going to look significantly different than the loan officer of the past, just because of all these tools, big data, all that stuff that's out there. And, even I just am thinking here about different scripts. If I did go out and use a tool like a model match or something, I peel agents in my area. I see the ones that are doing business. I go in and look at their product mix. I see that they do 80% of their business is done conventional, whatever it is. I go in, look at their loan amounts, and I reach out to them like, I already have an agent. I'm like, yeah, I know. I'm sure you do. You do a lot of business, but I don't let them have all that business. My question for you is, I know that most of your stuff is conventional and, looks like they put a good down payment. What do you do today with all those clients that maybe are early and they're not really looking for anything yet? Maybe they need some down payment help. Do you have a place for them? Well, no, not really. Well, great. Keep sending your stuff over there. I've got this tool. Just recommend it if they like it. Let me send you an email with my contact info and a landing page where you can send your clients. My commitment to you is if they do come back and they want to do a loan, I'm going to get them back to you. Does that sound fair? Yeah, that sounds fair, right? And you've now walked them down the process. You haven't told them to fire their agent. You've got your foot in the door and you weren't begging them to send you their next pre-approval. So there's a way to sell this and there's a way to do it. So I think this is super awesome. I really appreciate your time. I don't know if you've got any kind of closing things here. This is great. And I think a fantastic resource. I will include a bunch of stuff in the notes of how people could utilize this. And I know for a fact, if I was to go out and become a loan officer today and I had to originate loans, this would be one of those things that I would be talking about all the time. Because, right, they talk about product market fit. Well, I'm going to go and flip that around a little bit. I'm going to find my market. My market has a lot of first time home buyers. I'm going to find my market and then I'm going to find products to fit my market instead of trying to, right, like I'm going to flip that around. And I'm a loan officer today. This is part of the market that we all have. So I've got to find products and ways to cater to them. And I would be using this 100%. So that's my little piece.
Yeah. Well, thank you, John. Thank you so much. And I tell you, just listening to your advice and seeing your brain work on how to leverage this, kind of makes me want to go out and originate again. If I followed you, maybe I never would have started this because I would have been so uber wealthy from success. But so and I guess my final words is start a conversation today.
All about the conversations. And throughout life, right? The more skills we acquire, the more leverage we have, the more we can lift. Ultimately, the better you can do in the world. So if you got questions, concerns about anything mortgage related where I might be able to help, definitely reach out. I love having conversations. Got a lot of really cool tools, got free tools, got expensive tools, got all kinds of things. I don't know if they're right for you as an individual, but I do know that they're right and that they work. So if you've got questions, reach out. If you want to know more about down payment resources, I'm happy to tell you about what I know about it. Reach out to Rob and the folks over there. Have a great day. Sell well. There's a lot of business out there. 2025 is going to be a fantastic year and success is a choice. So I thank you all. Thank you, Rob.
Thank you, John.
If you're still here and you're watching this, you're probably getting something from our content. If so, maybe you know, or I'm sure you know, someone else that could also benefit. So if you could do us a solid, forward this, share it with your friends, other people that are like-minded that want help with simple solutions to grow their business. And if you want to do a little bit of a deeper dive someplace on here, there is a place to schedule a call with us to talk about your business and how we can grow it together. Look forward to hearing from you. Again, thank you for being here. Please do share.